Welcome to Wall Street Confidential. I'm Alex Steele, joined by Jim Cramer.
Nice.
Thanks for being here, Jim. I have to ask you about Cisco. It's a really scary outlook going forward. You own it for Action Alerts Plus portfolio. What's next for you with this stock?
If the stock didn't have $5 in cash, it would be a huge short. I mean, this is just a terrible outlook. I mean, really, to be down double digits for Cisco. But the cash position allows them eventually to be able to take advantage of the fact that Nortel's fallen apart, now Alcatel-Lucent's fallen apart. Those are the principal competitors, and Motorola's falling apart on the set-top box. So, I mean, they're setting themselves up to be the only networking company. You will not make money in this stock until the outlook flattens. In other words, that he says, look, I think we could be flat year over year. You also have a big dollar component. But what they've done and what you're seeing in this market right now is, and I've been emphasizing this on Mad Money, you're seeing a bifurcation in the market. The companies that have a lot of cash and the companies that don't have a lot of cash. There's also another bifurcation that's going on, which is companies that have maintained their forecast and companies that have cut their forecast. If you have a lot of cash and you've maintained your forecast, your stock's going up. If you have a lot of cash and you cut your forecast, your stock does nothing. And if you don't have a lot of cash and you cut your forecast, your stock goes down. So those are the three categories that I see. Cisco fits in the middle, which means it does nothing.
And let me ask you about the tech sector in general, because on Mad Money you were saying that the tech rally isn't really to be trusted. Is there another stock like a Cisco that?
Well, you know, the only ones that are really that can be trusted are Apple, Research in Motion. Those can definitely be trusted. Those are doing very well. Amazon, which is doing very well, and Google, which is because it's got a secular trend going, even though the cyclical down works. Now, what's happened repeatedly in these tech rallies is that a lot of stocks get taken up for no reason. And in each case, now I've been heavily criticized by a lot of people say, Jim, why aren't you playing these rallies? If you look at the longer term view of tech, it's been terrible. And the reason why people keep getting trapped is that you get these rallies and people say, well, it must be the last bad quarter. It's not the last bad quarter, but people are still willing to believe. They believe endlessly, which is why the NASDAQ never really has any gains. Today, for instance, they're taking the SOX up very big. Well, I mean, there isn't a company in the SOX that isn't doing category 3, which is cutting forecast. So I have to be strict to my rules, which is that I'm not going to recommend stocks that are on the fundamental decline. I'm willing to miss a 5% NASDAQ rally simply because I have to have some grounding for it, and I don't. I said that on my show. On Monday, expect a several-day rally. This is day 3 of it. We get the unemployment tomorrow. I need some reason to think that the outlooks have stabilized. Look, by the time the outlooks go up, you have to own them. But I don't see the stabilization, so I can't recommend.
All right, thanks so much, Jim. And of course, like I said, Jim owns Cisco for his Action Alerts Plus portfolio. To find out how he's buying it, email us at action@thestreet.com.